Welcome to the deep dive. Today we're unpacking a really fascinating stock, one that kind of defies easy categorization and, well, commands a valuation that analysts either call brilliant or, frankly, warn against as lunacy. Strategy Inc., ticker MSTR.
Yeah, it's definitely one of a kind.
When we look at Strategy Inc., MSTR, we're seeing a company that has strategically transformed itself. It's become the world's most aggressive, certainly the most leveraged holder of Bitcoin.
Right, the core of it.
And the conflict, the real question we're trying to answer today is whether MSTR is, some kind of visionary blueprint for the 21st century digital asset corporation, or if it's just a high-stakes gamble built on, well, massive financial leverage.
A huge gamble, potentially.
So our mission is to dissect how Strategy Inc. actually built this staggering $73 billion market capitalization, especially considering it was trading around $254.57 as of October 30th, 2025. We need to figure out what's truly anchoring this stock. What is the market really paying for here?
And look, to understand MSTR, you really can't use the traditional rules of investing. Forget PE ratios, forget standard ROIC. It just doesn't apply in the usual way.
Right.
This is financial engineering, pure and simple, centered entirely on asset accumulation, specifically Bitcoin, not operational profit from its software business. We absolutely have to adopt a multifaceted approach to grasp the immense risks, the intentional liquidity shortages even, and the aggressive financial strategy that's driving this whole valuation.
Okay, so we've broken this deep dive into two main parts. First, we'll analyze the internal engine, let's say that's chapters 1 through 3. We'll cover the dual business model, the pretty high-stakes history of its management, and the really unconventional financial architecture they've built. Then in part 2, we'll turn outward. We'll examine market sentiment, which is all over the place, the kind of puzzling ownership dynamics, and then try to reach a conclusion on that valuation premium.
Sounds good.
And just a note, all the data points we're using today come courtesy of the research team at Stock Analytics AI. They cover the S&P 500, and they're moving on to the NASDAQ 100 next. Definitely a valuable resource if you track these markets. Okay, let's dig into the nuts and bolts.
Let's do it.
We begin with Chapter 1, Business Analysis. Let's talk about this unique dual business model. Because the pivot here wasn't just a tweak, was it? It was more like a full corporate identity transplant.
Oh, absolutely seismic. Strategy Inc. completely redefined its purpose. Its primary identity now is, as they put it, the world's foremost Bitcoin development company.
Bitcoin development company. Interesting phrasing.
Right. And their stated mission is to strategically accumulate Bitcoin as a treasury reserve asset. And success for them is measured by one crucial metric, accreting Bitcoin per share, or BPS.
BPS, Bitcoin per share. So that's the real thesis, isn't it? They aren't primarily trying to sell more software anymore.
Not primarily, no.
They're telling the market, they are fundamentally a BPS factory. That's the core insight, really, of the whole restructuring.
Precisely.
Yeah.
And that repositioning, it really clarifies the role of the legacy segment, the original software business.
Right, the enterprise analytics part.
Exactly. The software side that sells the Strategy 1 BI platform, it still generates cash flow, sure.
Right.
But that revenue, which was, about $463.5 million in 2024, it's been stagnant, even declining slightly.
So its purpose now is...
Well, it's basically been repurposed. Its main job now is to help service the massive debt they've taken on to acquire all that Bitcoin.
Okay, let's talk about the scale of that ambition, because the numbers involved are just jaw-dropping.
They truly are. As of late October 2025, Strategy holds, get this, 640,808 BTC.
Wow.
That figure represents 3.1% of all Bitcoin that will ever be mined. It makes them the largest publicly traded corporate holder by, an order of magnitude. There's no one else even close.
Okay, I agree that their capital access is key, their ability to raise money, but doesn't the sheer size of that hoard also create this massive concentration risk? If they ever had to liquidate even a small percentage of that, maybe to cover debt in a downturn, wouldn't they just crush the very market they're trying to invest in?
That is absolutely the ultimate systemic risk they face, you're right. But their operational advantage, the thing they really emphasize, isn't just the hoarding, it's the continuous capital markets access.
Oh, okay.
They have this proven, quite unique ability to raise billions through complex debt and equity offerings, often on pretty favorable terms, specifically to acquire Bitcoin faster than anyone else. That's their real competitive moat as they see it.
So for an investor looking at MSTR, the value proposition isn't just getting exposure to Bitcoin.
No, it's more specific.
It's actively managed, leveraged Bitcoin exposure. And you get that through not just the common stock, MSTR, but also there's 4 different classes of preferred stock they've issued: STRF, STRK, STRD, and STRC.
Exactly. It's a whole capital structure built around this Bitcoin play.
And this unique financial structure, it's only possible because of the person driving the bus, right? That $73 billion market cap isn't just a bet on Bitcoin itself. It feels like a bet on Executive Chairman Michael Saylor's very unique brand of conviction.
Absolutely. Which brings us neatly to Chapter 2, Management Evaluation.
Yeah, let's talk about Saylor.
Saylor's history is crucial here because it really illustrates the immense risk tolerance that defines the current strategy. I mean, he has navigated, and sometimes you could argue caused, 3 major crises for the company.
Right. What were they?
Well, Crisis 1 was way back during the dot-com bubble. There was the bubble itself, plus a 2000 SEC accounting scandal involving improper revenue recognition. It was bad. The stock collapsed 62% in a single day. SEC settlements followed.
Okay, but he survived that. And then he launched Crisis 2, which was this radical pivot to Bitcoin starting in 2020.
Exactly. Based on his strongly held view about the risks of fiat currency debasement, he kicked it off with that initial, pretty bold $250 million purchase.
And then Crisis 3.
That was navigating the 2022 Bitcoin crash. They faced intense scrutiny, particularly over a big leveraged loan they had taken out. People were asking, what happens if Bitcoin keeps falling? His response was just unyielding. He said something like, there are no scenarios that I'm aware in which we would sell.
Wow.
That unwavering belief, that conviction, that's really the bedrock MSTR investors are buying into.
Okay, but let's look at the highly unconventional financial structure they created to fund this conviction. You mentioned financial engineering. The company is fundamentally a machine for share issuance, isn't it? Not share buybacks like many tech companies.
Precisely the opposite of buybacks.
Yeah.
And that ties directly back to their cost of leverage. They pay substantial dividends on those preferred stock classes they issue to raise capital.
How substantial?
The total annual cost, just for the debt interest in those preferred dividends, is a staggering $689 million. That's basically the price of admission each year to stay leveraged to the hilt in Bitcoin.
Wait, okay, let's break down the dilution dynamic here then. If that $689 million annual cost is core to their strategy, how is it actually funded? Where does that money come from?
Well, it's essentially a perpetual financing cycle.
Yeah.
Common shareholders, the holders of MSTR stock, are continually diluted. This happens via at-the-market offerings, or ATM offerings, where the company sells new shares directly into the market.
Right.
That fresh capital raised from selling new MSTR shares is then explicitly used to pay the yield owed to the preferred shareholders and the debt holders.
So it's a mechanism where the common shareholder is kind of subsidizing the preferred shareholders and debt holders just to keep the Bitcoin accumulation engine turning.
That's a pretty accurate way to put it. Yeah, it keeps the machine going.
Which means traditional metrics like return on invested capital for the software business, which you said was, what, negative 4.38% in 2024?
Yeah.
They're basically meaningless in this context.
Management actively ignores them, or at least downplays them significantly. What really matters to them, their self-defined measure of success, is that BTC yield.
The Bitcoin per share growth.
Exactly. That was 26.0% year-to-date through Q3 2025. From their perspective, they are successfully increasing Bitcoin ownership per share faster than dilution. And that is what they want the market to focus on above all else.
Okay, that really sets the stage for Chapter 3, Financial Analysis, where the balance sheet tells the story of, well, intentional risk-taking.
Absolutely. And a key change happened recently. Since January 1st, 2025, they adopted the new FASB fair value accounting rules for digital assets.
Ah, right. What does that mean practically?
It means that changes in the market value of the company's Bitcoin holdings are now recognized directly in the income statement quarter by quarter.
Okay, and this is why their reported income is so incredibly volatile now, right? It swings wildly with the price of Bitcoin.
Massively volatile, yes.
Yeah.
For example, that reported $3.9 billion operating income in Q3 2025. Almost all of that was an unrealized gain on their Bitcoin holdings. It's essentially paper profit volatility hitting the bottom line. But maybe more critically, you have to look at the cash flow. Free cash flow, FCF, is starkly negative. Strategy is a capital consumer, big time, not a generator.
So they're burning cash.
Well, they're constantly spending cash to acquire Bitcoin, and that spending is funded almost entirely by financing inflows, meaning issuing more stock and debt. Huge cash outflows for Bitcoin acquisition, funded by huge cash inflows from financing activities.
Let's talk about the leverage specifically. How much debt are we actually talking about on the balance sheet?
We're talking $8.2 billion in long-term debt, mostly in the form of convertible senior notes. And on top of that, another $6.7 billion in preferred equity, which also functions somewhat like debt given the mandatory dividends.
Wow. That is immense leverage, all built predominantly on a single, notoriously volatile asset class.
It is.
And then the liquidity picture, you mentioned intentional shortages. The current ratio is just 0.68. For most businesses, a ratio below 1.0 signals serious trouble, meaning short-term liabilities exceed current assets. That sounds terrifying for a normal company. Panic time, right?
For a traditional company, absolutely. Alarm bells will be ringing.
So can you give us the 30-second primer on why they see that 0.68 ratio as a deliberate feature instead of a ticking time bomb?
Sure. It really comes down to intentional non-diversification and their core belief about fiat currency. They don't hold a large cash buffer because holding cash, in their view, goes against their thesis that fiat currency is constantly debasing and losing value.
Okay.
So their solvency, their ability to meet obligations, relies entirely on their continuous, unimpeded access to the equity markets via that ATM program we discussed.
Selling more stock.
Selling more stock, consistently. If the capital markets were to seize up for some reason, or if the MSTR stock price drops too low to make issuing new shares worthwhile or feasible, well then the entire solvency model is challenged, seriously challenged.
That sounds like a terrifying tightrope walk, which actually sets the perfect backdrop for part 2 of our discussion. Let's move to chapter 4, market sentiment. It seems pretty clear MSTR is a total battleground stock.
Oh, it truly is. You see it everywhere. The official analyst consensus is a strong buy, believe it or not.
Yeah.
But then you look at the actual 12-month price targets.
Yeah.
They are exceptionally wide. The range goes from a low of $175 all the way up to a high of $705.
That's a massive range.
Huge dispersion. It just shows the deep institutional disagreement on how to value this Bitcoin accumulation engine, and maybe more importantly, how much of a premium, if any, to place on this specific management team and their strategy.
And that disagreement, that battle, is reflected in the short interest too, I imagine.
Absolutely. The short interest is quite high. It stands at 9.52% of the float. That's significantly higher, about 3 times higher than the average for its peer group.
So plenty of bears out there betting against it.
Definitely. They're betting that the premium is unjustified, that the whole thing is too risky. And adding to their view, the technical picture has been bearish lately. The stock's trading significantly below both its 50-day moving average, around $321, and its 200-day, around $347.
Okay, but on the bullish side, though, there was some recent news. S&P Global recently assigned them a corporate credit rating, right? A B non-investment grade rating.
That's right. And interestingly, management actually spun this as a positive development.
How so? It's a junk rating.
Well, in their view, just getting any rating from S&P, even a speculative one, potentially expands their access to different parts of the capital markets. For them, every door they can open for more debt issuance is seen as a victory. Regardless of the rating itself, it validates their access.
Interesting perspective. Okay, let's turn our attention now to Chapter 5, ownership structure. Who is actually buying this battleground stock, and maybe just as importantly, who is selling it?
Right, and here we see 2 really starkly different dynamics playing out. First, you have massive passive institutional demand. About 55% of the stock is held by institutions, led by the usual giants, Vanguard and BlackRock.
Okay, the index funds.
Exactly. And the critical dynamic here is index inclusion. Because MSTR is in indexes like the NASDAQ 100, these passive funds are forced to buy the stock, regardless of the price or their opinion of the strategy.
Ah, so that creates price-agnostic demand.
Precisely. It provides a sort of stable floor under the stock price and definitely helps maintain that valuation premium we keep talking about.
Okay, but then there's the other side of the coin. There seems to be a huge bright red flag when you look at insider activity, right?
Indeed, it's hard to ignore. We see heavy and consistent selling by top executives. Over 514,000 shares were sold just in the preceding 12 months.
Wow, that's a lot. Mostly stock options being exercised and sold.
Largely, yes, but the pattern is consistent. Now, Michael Saylor himself maintains strategic control through his Class B supervoting shares, so he's not losing control. However, this systematic liquidation of shares by other senior leaders, well, it certainly raises questions about their long-term alignment with the common shareholder base who are holding on.
Yeah, that contrast between passive buying and insider selling is striking. Okay, now for Chapter 6, risk assessment. If we were to summarize the SWOT analysis, strengths, weaknesses, opportunities, threats, what are the real extremes this company faces?
Well, the strengths are pretty obvious by now. Those unmatched Bitcoin holdings, the first mover advantage they established, and Saylor's undeniably visionary or at least highly convicted leadership.
Okay. And the weaknesses?
Equally extreme, really. You have the extreme asset concentration. Almost everything is riding on Bitcoin. There's the heavily leveraged strategy itself, and the arguably unsustainable valuation premium tied to that dependent financial model relying on constant capital raising.
And the major opportunities seem pretty clear, too. Continued Bitcoin price appreciation is number one,
Right.
obviously. And then maybe potential inclusion in the S&P 500 down the line. That would be another enormous force-buying catalyst from index funds.
A huge one, yes. Broadening institutional adoption of Bitcoin generally also helps their case.
But the threats are definitely mounting. A major Bitcoin price collapse is the existential one. Adverse regulatory changes are always a risk in crypto. And increasingly, you have serious competition from low-cost spot Bitcoin ETFs.
That's a big one. Those ETFs offer direct, non-leveraged Bitcoin exposure without the corporate complexity, without the debt burden, and crucially, without paying that Saylor premium.
Yeah, that competition could really erode their value proposition over time.
It certainly could. And we also have to consider geopolitics. It's kind of a double-edged sword for MSTR.
How so?
Well, in the short term, any major macroeconomic shock, think tariffs, a sudden trade war, geopolitical instability, it triggers immediate risk-off sentiment in the markets.
Right. Investors flee to safety.
Exactly. And that hurts speculative assets like Bitcoin, and it tends to hurt highly leveraged stocks like MSTR even more sharply. So short-term pain.
But the other edge of the sword.
The contrarian view, the long-term validation, potentially. A deep crisis that truly destabilizes trust in the global fiat system, the very thing Saylor has been warning about. Well, that could actually accelerate the trend MSTR is betting on. It could, in a strange way, prove his whole strategy correct in the long run.
Fascinating dichotomy. Okay, this takes us to our final synthesis in Chapter 7, conclusion. Let's try to contrast the bull and the bear case one last time, boil it down.
Okay. The bull case fundamentally views MSTR as a kind of financial innovation. It's a sustainably accretive strategy, they argue, that uses clever financial engineering to maximize Bitcoin per share for its common stockholders. The ultimate goal is positioning the company to generate returns that actually outperform holding Bitcoin directly over the long term, thanks to the leverage and the active management.
So, smarter than just buying Bitcoin and the bear case. What's the core argument there?
The bear case sees a highly dependent house of cards. They believe it's built on extreme leverage, maybe market euphoria surrounding Bitcoin, and a financial model that's entirely dependent on continuous access to capital markets at favorable terms.
Right.
They argue the valuation premium, that extra layer on top of the Bitcoin value, is unsustainable and highly vulnerable to collapse if either Bitcoin's price stagnates, or perhaps more likely, if lower-cost, simpler investment vehicles like those spot ETFs really take hold and offer a better alternative.
Okay, so let's try to quantify that premium. What does a simple sum of the parts valuation tell us about how much the market is willing to pay beyond the raw assets?
Well, if we try to estimate a rough intrinsic value, and this is just an estimate, of course you take their massive BTC holdings, valued recently around $71 billion. You add some value for the legacy software business, let's be conservative and say $3 billion. Then you have to subtract their substantial net liabilities. That's debt plus preferred stock minus other assets, which comes out to around $14.8 billion.
Okay.
So $71 billion plus $3 billion minus $14.8 billion. That lands you at an estimated intrinsic value for MSTR of roughly $59.2 billion.
Got it. And since the current market capitalization, as we said, is around $73 billion,
Right.
that means the stock is trading at a substantial premium over that estimated intrinsic value, somewhere in the range of 22% to 26%.
Exactly. And that premium, that 22-26%, that's the entire story here. That is the price the market is currently willing to pay for the strategy itself, for management's perceived unique ability to execute that aggressive Bitcoin accumulation strategy, and maybe most importantly, for Michael Saylor's long-term, unshakable vision and conviction.
So if investors lose faith in the execution, or in Saylor, the stock could decline significantly even if the price of Bitcoin itself just holds steady or goes up slightly.
Absolutely. That premium is vulnerable. It's a bet on more than just Bitcoin.
So ultimately, investing in Strategy Inc. isn't just one bet, it's a bet layered upon a bet. It's clearly a bet on Bitcoin's future price. It's amplified by a huge amount of leverage. And maybe most critically, it's a gamble on the sustainability and the justification of that roughly 26% Sailor premium.
Well put.
And a key question for you, the listener, to consider as you wrap up this deep dive is, what happens to that premium if, say, a major competitor, like one of those spot Bitcoin ETFs, decides to cut its management fees effectively to zero to attract assets? That's the kind of competitive pressure that could really challenge MSTR's model. Something to think about.
Definitely.
We hope you found this breakdown of Strategy Inc.'s dual blueprint and its financial tightrope walk illuminating. Remember, this analysis came from the deep research provided by the team at Stock Analytics AI. For just €4.99 a month, members get access to their full playlist that's 500 deep dive videos covering all S&P 500 stocks. And exclusively for members, they are moving on to covering the NASDAQ 100 next. Plus, members can request specific stock deep dives. Just drop a ticker in the comments on their platform.
And finally, just the mandatory note, please remember this explicit disclaimer. This analysis was generated by an AI system based on Stock Analytics AI's research, intended purely for educational and informational purposes. It should absolutely not be considered financial advice. Please always conduct your own thorough research or consult with a qualified financial advisor before making any investment decisions.